I can go more into it, but I also think it's kind of a simple thing. It's just math. Like
Yeah.
maybe math isn't that complicated. Maybe math is kind of complicated for a lot of people, but I think it's just math. Like if anyone just wrote it down or put it in Excel, like
Hmm.
you made one column for each year for 30 years, and then you
Hmm.
started with some money or you regularly put in a certain amount of money every year, it adds up, and you don't have to be the greatest investor. You just have to have first saved and then second invested.
Hmm. Hmm. Okay. Well, all right. So I actually want to backtrack
Okay.
because, you know, people who might be watching this may not know who you are or who I am. We're friends. I've known you for 20 years, almost,
Yeah.
about 20 years. When did
Damn.
you start investing or getting interested in investing? Because I remember in high school or early high school, maybe even before that, you were talking about paper trading. So, what is paper trading? How can somebody start doing that? And when did you start?
So I'm not into to go meta. I'm not into status stuff. So it's I don't want to say I'm an expert or particularly good. I'm probably just an
I'm not.
average
I
guy,
understand.
and
He's so modest.
He is modest. This is a very Asian trait.
so I don't know if it's an Asian thing or not, but I'd rather be right than misconstrued wrongly, I guess. But
Yeah,
so I don't remember this paper trading thing. I don't think I did much paper, but in terms of my investing and thinking career, I've
yeah.
probably thought about it since I was a early teenager, so right around 99 2000. I guess as a kid, lots of people were looking at like tech stocks, and all the whole world was going crazy about the tech
The
bubble and
dot com
stuff.
bubble.
Yeah,
Yeah.
and so I think I kind of still remember in like elementary or middle school, standing on a playground with a friend, and we were just talking about like, oh, this tech company is cool, that tech company is cool. Like our parents probably had it, and we had no money obviously because we were kids,
Right.
and we
Right.
thought we knew something, but we knew zilch. But I think I bought my first stock, like one share of AOL for $100 back in the day,
Hmm.
and it was a good lesson. Like obviously didn't know anything about investing then, but I lost it all in the crash of the tech bubble, and
Yeah. Same thing happened to my mom.
so like I thought it was a good lesson, and so then
Yeah.
around then was probably when we knew each other more in high school,
Yeah.
and I don't think I did any paper trading stuff. That doesn't sound like me. I looked up some stuff here and there. I went to like a Business Week seminar back when they
Hmm.
had those where they teach you about like finding stocks and all that, and
Hmm.
I think that's how most people probably see it. They see those little mail-in flyers, and
Hmm.
someone says, "Oh, you could pick better stocks than whoever, or beat the market by like 5%, and all you need is our screener." And so I went to those partially because it was interesting, and partially because my dad and I were like, "Well, they'll give you a free lunch, or you could win an iPod or something, like in a
Hmm.
raffle." And I was like, "Yeah, why not? Like, I'm a poor high school kid. Like, why wouldn't I want a free meal and education? That sounds like a dream." I didn't know if it was quality education. Like, I didn't even think about if it was quality education. I was like, "Oh, this seems interesting. My dad gets this magazine.
Hmm.
Why not check it out?" And so it was good sales tactics, I guess, for them. And then they try to sell you their software, of course, and that's how they make money. And
Hmm.
we can go more into like, I think most advice is really just people selling themselves or their services rather than
Maybe.
actually trying to help people. And so I think it's a fundamental flaw in the financial services industry. But um, so I played around with that, and you screen through all these stocks and metrics that you don't even really know what it means until
Hmm.
later on when I was in business school, and uh, it's a wild ride. Some things you're like, wow, this thing went up 200%. Like, why didn't I buy it? Like, I was so stupid, or something else. And of course, you only remember the good ones, right? I can only remember the good ones. I don't remember really any of the bad ones or ones that I thought were good and it turned out badly because, like, that's how the human brain works. Like, unless I actually had like money on the line, right? So it's all like
200% in how much time though?
Oh, I don't know. I'm making up numbers, but call it like a year or two, right? 200% in like anything less than 5 years is like amazing. So.
Yeah, I mean, maybe for the time, but like these days it seems like people are speculating so much on penny stocks that the market is crazy volatile. I think on Friday there was some obscure ticker that went up 990% in a day or something like that.
That's every day. So like.
That's every day? Okay.
I mean that's a nature, right? If you let's just think about it in principle. Like, you got a penny stock. It's literally a penny. So what's the next amount it can go up? One penny. So that's already. That's 100% right there, right?
Yeah.
So if a penny went up to like 10 cents or something, then that's a humongous amount. But like, those are not real things. Like, I mean, they're
maybe garbage companies.
Yeah, there may be real companies, or they may be companies that have issued a small amount, but like, they're not like liquidly traded. Like, it's unlikely that anyone really owned them before, and like, it's very hard. That's like a whole niche market, I think, like those micro cap, like. Let's focus on these tiny little companies.
Yeah.
It's hard to buy in or out. Like, so, if you buy a lot because you're like, oh, whatever, this Conway company is a penny and I think it's going to be 10 pennies in 10 days, then it's like, well, if you try to buy a lot of that, people are going to see it and it's going to affect the price because there's only a few people that even know about Conway company. So, like, those aren't really investments. Those are, I think, people gambling. Those are people trying to get rich.
For sure.
Because... Unfortunately, to come back to the math, the way it works is it's completely asymmetric, right? Like if you have a penny stock and it's just one penny, let's say, and it goes up to 2 pennies. Sure, you made 100%, you doubled your money. But what's the other side, right? The other side is also minus 100%. And let's say it went from a penny to 10 pennies, right? So you did 10 times your money, that's 1,000%, right?
Mm-hmm.
But 1,000%'s upside now, you see. But then the downside's 100% still, right? Like, because if that penny goes to zero, it's still minus 100%. So the losses are really important, but that asymmetry is also really important. It's like, okay, like you could possibly make more than you lose. You all right? Can you hear me now?
I can hear you, yeah.
Yeah. So you could make more than you lose, but you could also lose it all, or a huge amount of it. And then the math is also like, well, now let's forget about pennies. Let's just say it's $100. If it goes down 50%, right, to $50, and you want to get back just to the same $100, what does it have to do? It goes down 50%, and then it has to go up 100%. So now you're going down 50%, you're trying to make 100%. Like, that's very difficult. Like, usually that's like a huge movement, right? Like, so it's unlikely that those things are going to happen. You can look at all the statistics on average returns and stuff, and let's just say for the broad U.S. markets and world in general, it's somewhere between 7-10% a year. So, like, I don't think it's any commonplace that people are making 200%. Like, sure, maybe you're going to hear those stories, but all those people that lost 100%, they're crying under a bridge, and they're not posting it on Reddit, right? Like, it's so. I think it's really important to say, like, what's a quality universe of information, and then wrap that with logic and math, and then say, okay, after all that, now attack on what do you have that's special knowledge? Like, do you understand TARDIS is better than other people? Okay, maybe then you have an advantage, right? But like, you also have like, this is a capitalist world. You have lots of people studying and trying to make money as fast as they can too, and so they're trying to get smart. And some people's jobs are like to do this every day, all the time. And for the casual person where they're not specialized in it or don't have the time to do it, it's very
huge disadvantage.
It's very difficult. And even if you're right? Like, let's say you love Tesla and it's like, boom, you made 100%. Okay, can you replicate it? Like, I don't care if you made 100% on Tesla or whatever company, right? It's like, how are you going to do that again multiple times until you retire? Like, okay, you doubled your money. Like, I don't care how much money you got. You got $100,000, you made it to $200,000. Okay, so what? What's your next thing? Is Tesla going to go up and double again? Or is it going to be some other company? How are you going to do that consistently And what's the process for doing that for 30 years? 30 years is a huge amount of time for lots of smart people to adapt and change, and all sorts of catastrophes happen. And so,
Right. Well,
yeah.
I have a few problems with that because I don't think it's every day that a company like Tesla comes around. So there's certainly that to factor in, right?
Sure, but then we'll get
also-
into specifics, let's say. I was just saying that as an example. You could
Yeah.
say company
But
X
also,
for that.
like, just because you made a huge margins on Tesla doesn't mean that you need to replicate that, right? As long as you're generally trending upwards, is what I think is fine,
Well,
right? 'Cause
what I'm saying
like you
is not
said,
really
the last thing you
general.
want to do is lose all your money, right?
Well,
So,
I'm saying that even if you made a lot of money in whatever company, right,
mhm.
you could just lose it again if you don't have a good process. So,
Yeah.
like, it's in that way, it's very much like casinos, right? Like, and when I say casinos, I don't mean like roulette. I mean more like poker, right? So, if we're talking poker, like there's a certain amount of odds, there is some strategy to it. There is some mathematical probabilities that say, okay, most of the time you should be playing with two aces, not sevens and twos, right? And so if you play long term with sevens and twos, you're gonna lose all your money probably, right?
Yeah.
But if you long term, if you play with double aces, okay, you'll probably do pretty well. So, and then you're not gonna do well every time though, right? Because sometimes something just happens, like maybe, I don't know, maybe a pandemic comes along and it just ruins it all, and it changes the dynamic of the world. But to have that process, I think, is really important, because once you have a process, then you can refine it, right? Then you can say, okay, I played this hand, and I thought it'd be pretty good, but I played it like 1,000 times, so it's a pretty good statistical kind of sample set, and I lost like 70% of the time, and like, that's not great. Like I wanna lose like maybe 30% of the time instead. And so then you can say, okay, I'm gonna adjust this. So I'm gonna play this a little less. I'll play this a little more. And I think it's more like that for investing. You can refine it. If all you're doing is saying, I'm just gonna gamble all my money on this company because I think it's great and it's got a particularly great founder, and everyone thinks it's a special time, right? Like, chances are it's not a special time. Chances are the company's an average company, it's an average person, or whatever. There's a lot of circumstances, and so, I think we're already diving too deep because it's like specific companies, one particular thing. Yeah. Like, I'm talking big picture. General is like saving first, investing a very diversified market portfolio second, and then like, okay, now we're talking like, oh, you're a millionaire. Okay, like now you can try to see if you're smarter than everyone else, because you can invest like 5% of your money and put it in whatever you want, and if you lose all of it, I don't even care. You're a millionaire, right? Like, so that's kind of why like investing is for the rich. And unfortunately it makes the rich richer, but that doesn't mean that like the layperson can't invest. It's just that I think they should invest differently. It's like, put in your 401ks, your Roth IRAs, or regular IRAs, and then just do a regular market index and you'll probably be fine. Focus on your career. Your career, you're gonna make whatever, like $60,000 a year, and you'll get $40,000 after taxes. Maybe you can invest a few thousand in investment accounts. That's a lot better than, and let's just say you just saved it in an investment account and put it in cash, right? That's $1,000 right there. It's $1,000 every year, right?
Yeah.
That's almost like getting 100% return in 1 year, in terms of like your savings and retirement savings, right? You went from $1,000 to $2,000 in 2 years, and you didn't even do any investing. All you did was save it, right? But if you tried to invest at $1,000 and try to get to 2,000, forget it. That'll take you likely like 7 to 10 years if you're average, and if you're and there's a possibility you could lose everything if you do something stupid. So I'm not opposed to people investing and learning, but like, they have to understand the perspective. I guess that's what's hard. I mean, the whole point of everyone outsourcing all this investment and financial advice is because they don't know how to do it, or they don't want to do it, or they're not good at it, and so they hope someone else is better. But I think the hope is the bad story. Everyone hopes someone else is better, and not a lot of people are great. Like,
yeah.